Hi everyone, I'm Rebecca Sides, Intercape Mercedes-Benz General Manager, and as promised I wanted to do some videos for you which were a little bit more personal, answering some of your questions and just going on a little bit more of a day-to-day route of the kind of questions that I talk about, the kind of questions that I answer with customers. So a question that I get asked all of the time, and this is I'd probably say actually every single day in work I get asked this question: why would I finance my car? So we have that age-old question of, is cash or finance better? So first and foremost, cash or finance, it doesn't really matter, it just suits whatever's best for the customer. But from our point of view, with regards to the finance options that we offer, there are two finance options which are really popular, which I wanted to talk about today. So those options are a hire purchase and a personal contract purchase. So they're two kinds of finance. I get asked about them both equally. And we have a very excellent document here which we use in work. Can you see that? Can you see that? You might be able to see that. Which basically we hand out to customers and we talk them through. And it goes through the main two options which we tend to use with customers, which are hire purchase and a personal contract purchase, or abbreviated PCP. So just to talk about them both equally, I'm just going to talk through them now. So for those of you who do or do not know, a hire purchase is a finance example whereby you put a deposit down at the front, or you don't have to, it's up to you, but most customers tend to put a deposit down at the front. They then choose the term that they would like to finance the car over, so 2, 3, 4, 5 years in some cases. At the end of the agreement, they would then own the car. So say for example the car is £35,000, they put in a £5,000 deposit, and then the £30,000 they would then pay so much a month, and at the end of the deal they would own the car. So on this little document here, which we have, you can see here, this is hire purchase. You put a deposit up at the front, and then effectively you then have this little part here, and at the end you own the car. So full ownership with equal repayments over the full term, and at the end the title passes upon payment of the purchase fee at the end to the customer. So that's a hire purchase, a very straightforward way of financing. But actually now I'd probably say most of our customers tend to do a personal contract purchase. Hire purchase isn't as popular as when I first started selling cars 10 years ago. Yes, I am old. So personal contract purchase, now this is to me one of the most beneficial products that are out there on the market. It's really good for customers. It allows you to get into a vehicle which you may not necessarily have thought that you could afford, but when you look at a way of paying a deposit and then manageable monthly repayments, that car then becomes available to you. Most manufacturers do this kind of finance. Mercedes-Benz Finance do this for us. And I'm just going to talk you through how that works. So again, you can pick your term, whether it be 2, 3 or 4 years. A lot of customers tend to do it over 3 years because our manufacturer's warranty is 3 years, so that falls in nicely. A 36-month warranty and of course a 36-month finance agreement, because then at the end of the agreement you're out of warranty and you're into a brand new car if you so wish. So most customers do tend to go for 36 months, but if you're somebody like me who gets bored of your car quite quickly, then 2 years is suitable for a lot of other people. So just on the personal contract purchase, which is the bottom half of the screen here, so as you can see there's a picture of the front of the car and the back, and then the gap in the middle. So just to confirm how this works, on a personal contract purchase you can or cannot put in a deposit up front. It's entirely up to you. Most people do tend to put in a deposit, but this is flexible. It can be £1,000, £2,000, £5,000. It can effectively be what you want, so long as it means that the deposit that you put in isn't greater than what the car is worth at the end of the contract. So I'll come on to that at the moment. That's called a residual value, but I'll talk about that in a moment. So you put a deposit in at the front, you then pick your term, so whether that be 2, 3 or 4 years. And then the finance system then works out what that car would be worth at the end of those 2, 3 or 4 years. So we don't have any say over that as a salesperson or as a manager. We can't change that. That residual value is set by the finance system. And that is called a guaranteed future value. Abbreviated, it's called a GFV. So guaranteed future value. And what that means is that you put your deposit in up at the front. You then pick your term, as I've just mentioned, and then at the end of the deal, whether it be 2, 3 or 4 years, that car has a value. So say for example, this is very, very brief maths. So say for example, you buy a car that is worth £35,000 again, you put in a £5,000 deposit up here. Say for example, it says that the car at the end is going to be worth £15,000. That means that the gap that you're financing is £15,000. So that means that it's beneficial for you because of course what you're not having to do is finance the full amount of the car. It means that you're actually able to just finance part of it and then at the end get yourself into a brand new car if you want to. So at the end of the deal on a PCP you have 4 options. Now these 4 options are always really the same. So the first one is to return the car. So if at the end of the agreement you think, right, I don't want this car anymore, I've liked it, but it's not for me, it's not a car I want anymore, then you would hand that car back. However, a lot of customers think, do you know what, I actually do really like this car. So they think, right, I'm going to retain the car and I'm going to buy the vehicle based upon what that guaranteed future value was. So as I gave in my example there, I said that an option might be that the car is worth £15,000 at the end. So if it is, somebody might decide to buy that car outright and pay the £15,000. Another option is actually to refinance that £15,000, which some customers do, some customers don't. It depends if you want to get into a new car. So what you can actually do is call up Mercedes-Benz Finance and say, right, I really like this car. And then they can tell you what the payments would then change to, because the payments wouldn't stay the same, they would change because the car of course now is an older car, but you can refinance it if you want to. And then the 4th option is to renew your vehicle, so to get a new car. So as you can see here, we have return, retain, renew, but in that retain one of course there's kind of 2 options because you can pay the balance off in full or you can refinance it, as I said before. Now the benefit of a PCP in my opinion, this is again all in my opinion, there's a lot of benefits to it, but one of the biggest benefits in my opinion is we have a lot of customers saying, well, why wouldn't I just buy the car for cash? I have the cash there, I'll just use my cash. Well, in my opinion, cars are of course depreciating assets, most of them are. It's very rare that you find cars that appreciate unless it's a very high-end car which is very hard to get hold of. I don't know, such as for example an SLS, they're a very rare car, they're not made anymore. So if you have cars like that, then they of course may appreciate. But most cases cars are depreciating assets. So in that case, I would make it more financial sense to put my hard-earned money into something that's going to make me money rather than something that's going to depreciate in value. So by putting your money into, say, I don't know, a property investment or something whereby you're going to make money, or a business, then of course that allows you to then be able to not have to worry about putting your money into a car because you've got a chance to put it into something that's going to make you money because you can use PCP. Here. So PCP, personal contract purchase. So that's one of the first things that I would say if anybody asks me why would I get a PCP is exactly that. So why put your hard-earned money into something that's going to lose money when you can put it into something else and take our finance options. The second option I think I touched on at the beginning of the video is that with regards to a PCP, you often find that you may fall in love with the vehicle and you may think that, oh, you know, I couldn't afford to spend £50,000-60,000 on that car. But when you look at it on a PCP and you find out the payments are manageable, of course through responsible lending and making sure that that is something that you can afford, then that vehicle then might actually fit into your monthly budget, because rather than having to give a lump sum of say 60,000, you may have repayments of £400 or £500 a month, which work out completely manageable for you. So there are 2 options which I would say. There's a lot of other options, but I'm going to do another video about that, just talking about the benefits of using Mercedes-Benz Finance as opposed to using, for example, a bank's lending, etc. But that's going to do another video. This is just to answer about a PCP or a HP. So just to come back to those options at the end of a PCP, it's important that I just talk about the guaranteed residual value. So the GFV, or guaranteed residual value, as I said, is set by the finance company whilst the quotes are getting done. So if I get a customer who asks me to do a quote on a C-Class, whilst I'm working out the price that the customer is going to pay for the car and the term that they're going to have the car for, the finance system then generates a guaranteed future value on what the car would be worth at the end. Now, in this instance, sometimes there are ways that you would actually find the car is actually worth more than that at the end. So say for example you buy a car that's 3 years up, that you're going to have for 3 years. So you say, right, I want a PCP over 3 years, I'm going to do 10,000 miles a year, and then you have that car and you keep that car. But then at the end of the deal you've actually only done 20,000 miles on the car, maybe your circumstances changed, you moved closer to home from work, or you got a second car, etc., etc., then at the end of the contract, that car might actually be worth more than the guaranteed future value. So let me just get a quick example of that. So it might be worth more. So there's my excellent arrow. So if the car is worth more than the guaranteed future value at the end, then what that means is that you're in equity. So that means then that, say at the end of the contract, you think, right, I've loved this car, let's go and get a valuation from the dealership and find out how much it's worth to trade it in for a new one. And if, for example, you've done less miles in the car, you've kept it in really good condition, had it serviced, etc., etc., then the car might be worth more, so you might be in some equity, and then you can use that as a deposit on your next car. However, say for example, a new model has come out of the car that you bought 3 years ago. So you bought a C-Class, and then a new C-Class has come out whilst you've had that car. So that car might, because you've done more miles than you thought you were going to do, a new model's come out, you haven't really looked after it, it needs 4-wheel refurbs, it's got a scratch down the side. So say for example that car is actually worth less, there's my excellent down arrow. So say that car is worth less than the guaranteed future value, then what that means is that you can just hand that car back. Now yes, there are some charges at the end. So if for example you go over your mileage, so say for example you say you're going to do 10,000 miles a year, but you actually do 20,000 miles a year, so you've done an extra 30,000 miles over the term, then you of course then would be charged a pence per mile, which you agree when you sign the contract, by the way. It's not a scary fee that's come out of nowhere. You would already know what that cost is going to be, so you would pay that at the end of the contract. There's also some conditions on the contract that you sign about damage on the car. So fair wear and tear is of course expected, but there's conditions in the contract that you sign, so you know exactly what you're signing. So on that basis, you can find yourself in equity or in negative equity, but all of those cases are catered for because of the guaranteed future value. So you're protected because you're buying a car that you know is going to be worth a certain amount at the end, and if the market hasn't performed very well and that car is worth less, then you can just hand it back. But if the market's performed well and that car is worth more, or if you've done less miles and you've kept it in excellent tip-top condition, then it might be worth more, so you've got a little bit of cha-ching to use as a deposit on your next car. So there's swings and roundabouts. But the reason why I wanted to do this video is because I do get asked so many times, well, why would I do that? I've got the money in my bank, why wouldn't I just buy the car? Well, as I've just said, just to kind of close, I suppose, why would you put your hard-earned money into something that you can drip feed per month, and at the end then put yourself into a brand new car? So it's like a mortgage. You know, we all pay, most of us pay mortgages, which allows us to get into a beautiful home for a manageable monthly repayment. Well, you can do the same on a car, so you can just drip feed that asset and then not have it sitting as, if you like, on your own personal balance sheet, not have it sitting as an asset on your own personal balance sheet. So I think personally that that's a really good option for somebody who's looking to buy a car. The other way of looking at it, which some people do often say to me, is, well, at the end of the PCP, I don't own anything, so why would I do that? Well, no, you don't. You can buy the car if you want, but technically at the end of the contract, you don't own anything. So if you were buying a car for cash, then yes, in 3 years' time, you would own something. But that money that you've been paying per month for the car would be the natural depreciation that you take, give or take. I don't know, it can differ per car, but that natural depreciation that would happen per month would fall in line with your repayments anyway. So if you were to buy a car again for cash, you're just putting that full lump sum in, which in 3 years' time you'd probably be bored of anyway and want to change, and then you'll sell the car and get the cash back. But by doing it on a PCP, what you've been able to do is get the car that you like, keep it for 3 years, but not have to tie that money up in an asset. You've been able to keep your money free. So I hope that gives you some answers just on our two kinds of finance, so hire purchase and PCP. These forms you can get from us if you want them, that's no problem if you do want me to send you one. So just to close, I'm just going to list off the main benefits that we see of a hire purchase or a PCP. So number 1, easy budgeting with fixed interest and fixed monthly repayments. Simple and easy to set up with no front fees. 2. Number 3, choice of terms structured to meet your payment budget. Number 4, available from zero deposit. Number 5, flexibility of agreement with partial settlement at any point. Number 6, Inchcape loyalty tracker, which will assist you to upgrade at the most viable financial opportunity. Number 7, linked credit agreements with additional consumer protection. And number 8, fraud protection with our security registration scheme. Cha-ching. So if you have any questions about any of this, you can send me an email, rebecca.sides@ir.inchcape.co.uk. Of course, like, subscribe on all of my videos. Any questions, comment below. And the next video I'm going to do, as I said, is going to talk about why you should take dealer finance as opposed to using bank loans, etc., because there's lots of different options there to go over. So hope you like my office, and I'll see everybody soon. Take care. Bye.